Finally, we have Vikas Khemani, founder of Carnelian Asset Management and Advisors, an India-based boutique investment management firm. He's managing $1.2 billion. He's a seasoned capital markets expert with over 27 years of experience and a passion for investing and building businesses. I invite Vikas to talk about his fund and investing in India.
Good afternoon. Pleasure to be here, and I'm sure you got a lot of talks on India since afternoon, so I'll give my talk quite brief and crisp. But what I really like to do is build perspective about how should you look at India. I think, and I jokingly say that Indians living in India don't understand Indian story very well. How people, somebody living 10,000 miles away, will understand India's story well, because seeing from far, it's very, very hard to understand India, what kind of opportunity it is. So I personally feel that India is one of the most transforming market at this point in time. I've been in markets or investing for 30 years. I haven't seen such kind of transformative phase India is going through. And why do I say that? So I'll just try to outline that in the next couple of minutes. So I think all of us know that India at one point in time was a very, very prosperous society, very, very prosperous economy 4-5 years ago. India's world share was almost 25, in the world trade was 25 to 26%. Same thing was with China. And because of the British rule, India lost its entire sort of progress. And by the time India got independent, it was less than 2%. And China started the journey of recapturing its lost glory about 40 years ago. India started that meaningfully in the last 10 years. And it's very not so exciting to speak to empty chairs, but I'm just trying to keep my momentum going. So India started its journey in the last 10 years. Now, why do I say that? Is because, recently our Prime Minister has carried out the vision that over the next 25 years, what is called India's Amrit Kal period, that India will become a developed nation. That's a kind of, aspiration India has sort of put out there. And so it is good to examine that what is possible in this 25 years, why it is possible this time around, because India also has a story of start, stop in last many, many decades, right? So if you see, if this vision were to turn out to be true, our share of GDP, which is around 3-4%, will end up becoming 16-17%. Our total GDP size is about less than $4 trillion. By the time Amrit Kal happens, in 2047, India turns 100, it will be about $29-30 trillion. Per capita income will go from $2,500 to $18,000. But more importantly, I think, why it is possible to happen this time around. So if you see last 10 years, a lot of foundational work has happened, which is very, very essential. What is this foundational work? So India has carried out significant, 3-step foundational work based on which it's building its journey. Number one, India has carried out long-pending economic reforms. GST, IBC, VEDA, many such reforms have been carried out which are pending for 20, 30, 40 years. But if you see, this is the first time in the history of independent India we have carried out reforms by conviction, not by compulsion. 1992 was by compulsion. This is by conviction, because it was needed to root out the deep pending inefficiency of the economy of the Indian economy. GST, if you remember, when it was introduced, it was a very painful, everybody was criticizing. Today, it is considered one of the most transformative reforms ever has been done. The tax collections, last month's tax collection, 2,25,000 crore, only GST, which was a very, very big number, right? Second, India built a very, very big transformative digital stack, which has again, whether it was, a UPI, Jan Dhan, DBT, everything, today, India, across all kind of setup. UPI is a great example where almost 20 billion transactions get carried out at fraction of second without cost. This is nowhere in the world, right? So India has built such a solid digital transformation based on which a lot of efficiencies are getting built. And the last but not the least, the infrastructure reform. India is building roads, ports, railways, airports, everything at a very, very solid, different speed which India has never built. So this foundational work has happened, but more importantly, even those foundational, then these three works, I think India has gone through a significant mindset shift. And if you understand, see, mindset shifts are very, very difficult to carry out, but when they happen, they carry out for a very, very long time. So what are these mindset shifts? Let's revisit them. So number one mindset shift which India has gone through is India has moved from incremental mindset to exponential mindset. What do I mean by that? No more India think that will take 10, 20, 30 years to address a problem. Housing for all, power for all. Everything is carried out at a very significant speed. Sense of urgency is very, very high. Right? Even in fact, recent great event called Mahakumbh was another example of exponential India. I don't think you will find any example in the human history where 65 crore people got aggregated in a short period of time at one place and went smoothly without any hiccup. Think about it from organizers' perspective, what kind of nightmares, risks they would have taken before organizing. That is nothing but the mindset of the country has changed, that we can do things which are very, very different size, scale, and in a very different level. Second, India has moved from constrained mindset to non-constrained mindset. Right? Historically, a lot of us have grown up believing that India is a poor country. We are a poor country. We don't have money. Right? In fact, very famous statement by our erstwhile Defence Minister A.K. Antony in Parliament that we don't have money for defence. Right? Today, you don't hear anything. We have money for world-class infrastructure. We have money for taking care of poor. We have money for defence. We have money for everything. Now, when a country goes through, we will build this, we'll organize resources, whatever needs to be done for that. That's the mindset which has huge economic ramifications. Third, historically, whenever India faced any problem, we looked towards West for solutions. UN, World Bank will come and preach and give us the solutions. No more the case. India has found its own confidence to find solutions suited to its own need. And that's again a very big departure from the past. Whether it was COVID example to UPI to any, if you see in COVID, in fact, there was a lot of pressure. For the vaccine part, also for the economic stimulus part. If you remember, there was huge pressure to copy Western style economic stimulus to Indian economy, and India didn't do that. India said we will do what is suited for our own economy and society. And today, that model has been far more appreciated than the benefit of hindsight. So India is saying that it does not suffer from inferiority complex anymore. It has belief in its own intellectual capability to find solutions. Fourth, India is scaling at, innovating at a scale and a low cost. Again, UPI, telecom are a classic example. Nowhere in the world, less than $2, you get unlimited data on phone, including China. Now, when you have this kind of innovation, your large part of the population gets plugged into the mainstream, which is again a very, very big, departure from the past. Fifth, historically we were taught only two models, socialism and capitalism. But India has beautifully experimented in the last 10 years that development and social welfare are not at odds with each other. They can coexist and they are a good thing. And India has lifted 250 million people out of poverty in the last 10 years. Again, unprecedented in human history. Right? And the last but not the least again is, when it comes to geopolitical, India does not sit anymore in the corner. At the global stage, India sits in the center, drives the agenda, being assertive what it takes, right? And that's again a very big departure from the past. We have seen many such examples, whether, around Ukraine war when we came to, import oil to save India's, inflationary pressures. We've all seen that how entire Europe and the rest of the world suffered from it, but India kind of asserted and saved what it was right for her own economy. So I think these are some of the very big mindset shifts which have happened. And these mindset shifts will propel India into that next league of things. And these are very hard to build, but then when it's built, then it has its own momentum to carry out. And then this has a lot of rub-off effect on the wider psyche of the whole country. It rubs off on the wider population. It has unleashed a lot of entrepreneurial animal spirit throughout the country. When we meet companies, in smaller towns, tier 2, tier 3, tier 4 cities, it is unbelievable to see the kind of innovation which is taken in India, which again I'm telling you, people in India cannot see. So sitting people in US, there's no question of getting feeling of that, right? So my own belief is all these things which I talked about, whether foundational work versus the mindset shifts, will lead to three things: strength, scale, and speed. We are the most populous nation on the planet. We are the most aspirational nation on the planet, and we are the youngest nation on the planet. So if you see any company which has created a lot of wealth over the last 10, 20, 30, 40 years, any part of the world, you will find three things common in them: strength, scale, and speed. Apple would not be Apple without these three things. So same thing happening at the country level: strength, scale, and speed. And that is what makes me believe that India is kind of going through a very, very transformative phase. Just to give you some numbers, last year total India's corporate profits was $180 billion. In 2001 it was $8 billion. So this 20 years journey, when so much repairs was not there, so 8 billion to 180 billion, 170, 180 billion dollars total corporate profits. In this period, India had all kind of risk. We had multiple government changes, we had global financial crisis, EJ scam, whole scam, Fragile 5, demonetization, GST, ILFS crisis, Ukraine war, pandemic, everything came and went, and still India's corporate profits moved from $8 billion to $170, $180 billion. Our market Nifty points moved from 800 points to 24,000 points. Right? Again, 17-18% CAGR. My own view is that this $170-180 billion of corporate profits, even if I look at next 10 years, will go to $1 trillion. It means India's market cap will be anywhere between $20 to $25 trillion, which is today around $5 trillion. So why I say that next 10 years are one of the, next 25 years for sure, but next 10 years are even accelerated growth, which India is focusing. And there are many drivers, many trends to it. Our demographic, we are youngest nation, 28 years of median age, 2/3 of our population working age population. So many people consuming and producing is in GDP. Manufacturing as an opportunity has just begun in India. Still our manufacturing GDP is only 16-17%, which is expected to go to 20-25%. Now that's again a huge opportunity. India is one of the very unique, in the sense you have a domestic consumption opportunity, you have export opportunity, you have services opportunity. So it's a very balanced, sort of faceted economy. It's not dependent only on model. Like China was only export driven. There are many emerging markets which are commodity driven. India is not driven by any one. It is a very balanced economy. And today India is also another angle to look at it. It's an investment cycle driven. India's investment cycle has just kicked up. It's a very, very long way to go. So you will have investment going on, you have exports going on, you have consumption going on. So there are no major structural risks to India. I always say that finally, there are only 5 big risks historically India has faced. And if you see some of them, so how they have got repaired, you will get a lot of answer into the risk of India, right? And number one risk historically India has faced is current account deficit, right? Whenever in 2012 we became part of Fragile 5 because our current account deficit went 4.5% of GDP. Today it is less than 1%, and many times and every time your current account deficit is funded through the capital flows weaken, your currency depreciates. That's a very typical template or playbook which gets played out. This time around, that has completely got repaired with the manufacturing focus. I think in next 5-7 years, India will be a current account surplus country. Only 5 countries in the last 50 years have gone through this journey. Now, India will be the 5th country actually. Japan, Korea, China, Taiwan. India will be 5th. So the major transformation happens in any country's life when this change happens. Second, fiscal deficit. Again, India's fiscal deficit is one of the best managed in the world, including COVID, post-COVID, Third, banking system. Whenever a banking system goes for toss, economy gets sort of again weak. Today our banking system is, I can say with a lot of confidence, is the healthiest ever it has been, with the net NPA being 0.5%. It has never been that kind of clean banking system. I can say that even probably around the globe it will be one of the best banking system. Fourth, inflation. Whenever inflation goes out of hand, India suffers, but our inflation is in a very, very solid, well-managed space. And fifth, debt to GDP, corporate debt to GDP. Again, India is the only country whose debt to GDP post global financial crisis has come down. So we have managed that part. So, all five usual weaknesses of the Indian or any economy, and specifically for any emerging market, are in a very pink of health. And hence I do believe that India does not carry any of the historical fault lines which brought many weaknesses to its economy as well as the markets. And that's the reason I believe that one side you have many growth drivers, other side you have all your weaknesses, fault lines are repaired, and hence you will have one of the best wealth creation story ahead of us. That's my thought. So thank you very much.
Any questions?
Yeah.
Get it.
I've been out of country for some time. So from the outside perspective, I'm asking this question. If the government changes, do you still see all the things you said will still continue from your perspective?
So first of all, this government is not changing till 29, and even after that accordingly, but that's aside. If you look at last 3-4 decades, we have had all kinds of government, right? Except probably UPA 2. No government took regressive decisions. They were all progressive. Even in coalition government, they were all progressive. Like, so think about it. Today, new government coming, can they undo GST? Can they undo UPA? A lot of things can't be undone. Once you have built, see, getting done things are difficult. You can't undo GST, period. Now, once, of course, technically everything can be reversed, then, but if that happens, suppose there are only 3 kinds of government: enabling, neutral, disabling. As long as we are neutral to enabling government, it's fine. Tomorrow, let's say disabling government comes, things can go wrong. So, that time, obviously, I always say that, markets are always open. If you feel that something will materially change, you can always sell. So, but it's like this, those risks will always be around. In order to not, around those risks, we have to see what's happening right now. Like at least till 2029, there's no risk. And my own conviction, whatever little understanding I have of politics, that there's hardly any opposition right now. So I don't think, but anyway, in politics you never say no. Who knows what will happen in 2029? And secondly, any culture which builds any country is very hard to undo. So,
And I have another question. So from manufacturing, consumption, export, all these perspectives, for a retail investor, so who look into the companies and everything. So where do I start? Like looking into the which companies I need to look into. Where do I start? Like the manufacturing or export, all this consolidated. Where do the retail investors start?
I don't think retail, if you are, retail investors should invest into funds. I don't think retail investors should start looking at companies. If you were to then make hypothesis, there are lots of, it's probably an hour session. You can look at what are the companies where India will import substitute, India will export. There are many sectors like chemicals, auto components, electronics manufacturing, garmenting. Those are all, every opportunity is a big opportunity. You need to understand a large opportunity, right company, right sort of management. That's so I would not, just leave saying that, these are sectors you look at. Generally, you have to go and identify the right company to make money.
Thank you.
Thank you.
Thank you to all the speakers for sharing their insights on India, and thank you for being a wonderful audience. And with this, we conclude this session.
Take a look at these guys. Yes.